Okie dokie. Hello, everyone. Sorry for the 5-minute delay there. We were just ironing out some kinks in the stream, but we are good to go now. I'm here alongside Maxim, and we've got plenty of updates for you on this edition of This Week in Crypto. Quick reminder to those new and old that we will be going over plenty of data, but it is not to be considered investment advice. We crunch numbers based on analysis of divergences and how bullish or bearish things look now based on similar divergences we've seen in the past and how markets perform under those circumstances. So hopefully that all is clear to you. And if you do have questions about some specific assets, the state of the markets right now, generally just how to use some of our metrics, we're here to help, not only just on these streams, but in our Discord chats that we have every single day. We encourage you guys to really check it out and dig into all of the metrics that we share here today and let us know what you think. And that said, why don't we jump into what's happened over the past week and how things are looking now. Obviously, we're starting here on our screener as we typically do on our beginning of calls, and it's showing a pretty notable decline once again, particularly for altcoins. You see many projects in the top 100 market cap region that have dropped double-digit percentages once again. This has become kind of a growing trend we've all been used to over the past 6.5 months, ever since the mid-November all-time highs. And outside of a few projects like XCN here, and a few like Raptron and Tron, there really isn't much to be excited about. Phantom over here as well, but overall the price declines have been pretty noticeable, and even Bitcoin dropped very close to 27K yesterday. Ethereum dropped to 1700, which was its lowest in about 7 months. I think even longer, almost a year. But regardless, it's been a very rough go of things. And you can also notice that the social volume is very red among the top assets right now. You see, projects like BNB that actually had doubled the amount of discussion, but overall, the social volume for at least the top 10 projects outside of BNB are declining. And this is an interesting combination because it tells us that people's interest in crypto right now, after such a long and stagnant period, is beginning to wane. There is not as much hype in buying those dips, not as much excitement over crypto overall, and the various NFT and DeFi projects and gaming assets out there. It seems to be becoming a little more quiet and a little less of an intriguing sector for a lot of people who were holding out hopes that prices would have bounced by now. And generally speaking, that is a good thing, because we want to see capitulation, which is the act of giving up and dumping assets, giving essentially the weak hands, letting go of their coins. Those are usually the setups for a bounce. It doesn't mean it's going to happen now. It's more of a gradual process. But the more social volume bleeding we see with big red percentages, Ethereum going down 10-20% every week in the amount of its discussion, those are the kind of setups that we look for. And I'm curious on your take on this, Maxim, and just how we've seen the social volume end of the markets and how people are reacting right now. Oh yeah. Yeah, why don't we Yeah. So my mic is working and Max's is not. Okay. Uh, I can hear you fine, Maxim. Yeah. Yeah. All right. So sorry about that, everybody. It looks like Maxim's mic is limited at the moment on stream. I can hear him fine, and hopefully we get that fixed so you guys can hear his analysis and the great take he just gave me. Essentially, Maxim believes that there are some good signs going on, especially on the uh, social side of things in terms of negative perception of the markets continuing to rise. We can see here, Maxim was looking at this just yesterday, and I prepared it at the beginning of this stream. The amount of mentions of buy the dip. Notice how we're pretty much close to the same spot we were back when mid-May rolled around a couple of weeks ago and things were dropping off a cliff after the Fed raised the interest rates by 0.5%. However, the amount of people interested in buying the dip now is basically microscopic compared to what it was then. So that is a sign that people are beginning to give up and decide that the prices may go lower, and this isn't quite the opportunity that they thought it was 2 weeks ago. And typically, as I said, this is the time that we start to see people, shrugging their shoulders and say, I guess I'm just going to wait and see how things play out. And when you start to see people shrug their shoulders and there's a lot of passivity, that's typically a good setup. So if I switch to something like buy or buying or bought, and then I compare that with sell or selling or sold, see how things look here. So I'm going to make sure to click on shared axis because that's going to give a better true measurement of buys versus sell mentions. And we can see that it looks like sell mentions, it's kind of hard to see here, but sell mentions are picking up, and we are seeing the highest, at least bunch of spikes that we've seen since, I don't know, 4 or 5 days ago, probably a little longer than that. But it's especially interesting because buy spikes, if you really look at these fluctuations, they're staying kind of down right now. We're not, obviously, we're nowhere near where it was in late April when everyone was excited and buying the dip, but sell is actually up significantly compared to where we were in late April. That's a very good sign in terms of people's impatience catching up right now. And I would fathom that this is one of the better setups that we've seen on the social side in quite some time. Now, it doesn't mean that things are going to turn around next week. There's still so many other things to factor in. Maxim also mentioned funding rates and how important those are going to be, because that is where people actually put their money where their mouth is, instead of just, chatting on social media and saying they're buying more or selling more. Funding rates here is actually a measurement of how much they are actually placing their bets on the long side or the short side. For those of you who haven't seen this model, it's available for all Sandbase Pro members. All you do is you get your API that comes with every single membership to Sandbase Pro, and you plug it in to Google Sheets. You get the extension, and you just make a copy of the link that I'm showing right now, and it should pop right up for you, and you can check on these anytime in real time. And it's, trust me, a very powerful tool alongside a few others that I'll show on this call. But for the sake of looking at funding rates, the blue line here is the average Bitcoin funding rate across multiple exchanges, and the purple line is the average altcoin funding rate across about 100 different assets that aren't Bitcoin across multiple exchanges themselves. And we can see an interesting kind of mirroring pattern that's gone on for the past day or so, where Bitcoin has fluctuated up, a little down for a minute, and then up again. And look at how the purple line has almost gone the inverse direction and that's pretty rare. We don't always see that. Usually they're fluctuating more in tandem, and it's really, you only see this kind of thing in flat markets where people are kind of jumping between longing Bitcoin and shorting altcoins, or shorting Bitcoin and longing altcoins. But for now, as it stands, this morning for me, afternoon or evening for many of you over in Europe or Asia, we're seeing that Bitcoin is just slightly on the long side and altcoins are mildly on the short side. So typically, we want to see both in this green zone. And because Bitcoin is still showing a slight propensity to selling, which appears to have happened right after it kind of bottomed out here, that's a sign that we are not quite in capitulation mode yet. But if we see them both dip into green together, that's going to be the sign we look for as at least a short-term breakout. The different types of assets you can look at are all under this tab here too. So you're not just looking at overall averages. You can click on all chart and you can see all of this green going on. The green bars indicate the how deep of a short on average each asset is seeing. The red boxes show 8 hours ago. The blue are 16 hours ago, and green dots are 24 hours ago. You'll see them very small. But really what we're seeing is a trend of many altcoins still being shorted. Axie Infinity's down there, Bancor, Dent, Helium, Waves, among some that really have had or are still having very large short positions going on. And if those prices begin to rise, they can rise with a lot of momentum because the liquidations that occur from these shorts can essentially act as rocket fuel. There aren't really any that are in the red zone here. We can see the outlines for a few. This is showing like the last week and their highest points or their lowest points, but the solid colors show where they currently are. And really, the few ones that aren't in negative funding rate territory, they're pretty much neutral. So there still seems to be a steady bias of shorting going on toward altcoins that can favor altcoins over Bitcoin for the short term until this purple line starts to jump over the black line here, black 0% line into red territory. But we can also take it with a grain of salt because Bitcoin at any moment can send prices down or send prices upward. And so this blue line here is arguably a bit more important to keep your eye on. Do we want to do a quick test on Maxim's microphone, see if we're getting anything now, Gary? I'll just move on for now. Oh, Gary, are you gone as well? I can hear you fine, yeah. I'm seeing people say I can hear you. Can't hear Max. Oh well. Yeah. Yep, all good. So next up, why don't we look at NVT, because it's very interesting what's going on now. If we look at the history of this chart going back almost 5 years, we're seeing that when we get into the red zone, which indicates that the market cap is not quite justifying where prices are based on the amount of circulation happening on the network, the red zones typically result in prices falling. The green zone typically results in prices rising. We have been believe it or not, in a semi-green zone since October. And then as of this month, we're actually in bright green territory here. And if the month closes out in bright green, this would be the first time we're seeing a pure bullish circulation divergence since December 2017, and that's a big deal. This measurement is by no means perfect, but you can see enough evidence of green zones indicating prices will go up, and red zones indicating at least that prices will kind of become volatile. And interestingly, the prices have declined
semi-bullish divergence, but as it declines, you'll notice that the bars just get lower and lower until we start to output a pure bullish divergence like we are this month here in May. And whether prices suddenly bounce going into June is completely uncertain and not something we would predict by any means. But based on historical averages and outcomes in the past, we've seen that this is a pretty good zone to at least buy in with less risk historically. Based on what we saw, for the limited amount of months where we were in bright green back in 2017, prices did rise, and notice as soon as it turned orange and red here, prices declined once again. It's very, up until and the day moving
right? So we're seeing prices do this, and circulation, or whoops, don't want to do that. Circulation is doing, whoa, that line's going all over the place. There we go. So circulation is more or less like that, right? So bearish on or going down on the price side and moving up on the circulation side, usually a pretty good combination and leads to good things happening. It just takes time, right? Because this is a long-term indicator. It's not something like funding rates where you see a bunch of shorts and immediately prices rise, or see a bunch of longs and prices immediately fall. This is more a measurement of the overall health and activity and utility of the Bitcoin network right now, and it's looking to be pretty good. To an extent, we can see that the circulation did get boosted a lot due to the amount of polarization that happened in the second week of May after the FOMC announcement was made the first week. But arguably, it was already kind of moving up even when prices were declining before that. So I call this a pretty good sign. I definitely think it's a semi-bullish divergence right there. And then meanwhile, on the daily active addresses side, we see that the amount of unique addresses moving on the network is ticking up. This is also a good sign, considering that we're seeing about 967,000 unique active addresses per day on the BTC network compared to 6 months ago when we were at 925. That's also a good sign. Again, same divergence, prices moving down, and daily active addresses are slightly up. They're not exploding by any means, but it's whatever that percentage gain would be, call it 7-8%. It's a good sign to see that utility is growing despite prices declining, especially when you combine that with the amount of negative sentiment going on. Let me skip down to sentiment really quick to show you exactly how crazy it's been. So if we go to the last year, and I'm going to full screen this. So this is each week over the past year, and the higher above the 0% line, the more euphoric the crowd is. The lower these bars are below the 0% line, the the more fearful and amount of FUD the crowd is displaying. We saw the big euphoric zone right as we'd expect around the all-time highs before the big collapse in price. People started to get negative around here. Notice how really starting around here, the crowd has been pretty incorrect. And that's typically what we see. So for about the last 3.5 months, going back to early February, the crowd got euphoric here, prices topped. The crowd got fearful here, the prices bottomed. And they stayed bottoming until right here where things corrected while the crowd was still negative. So this was an exception, the crowd was right. And then they immediately got very wrong again and started buying the dip here huge until the price crashed. And now they're very, very negative again. And typically with negativity, if we look historically at what Bitcoin's done, this is the time that you want to get in. It is by no means a certainty that prices will turn around just because the crowd is negative. There are so many other factors that go into it. But when there is such a dismal outlook on Bitcoin, it typically indicates that the bottom is near, simply because we have touted many times with crypto markets, the price tends to go the direction of the crowd's least expectation. And right now the expectation is for the prices to move further down, which increases the chances of prices moving up. So now let's go over MVRV here. MVRV, as we talked about 2 weeks ago, we were in that extreme opportunity zone where we were below the 15% mark, which is, it's moved up a tiny bit. There's 15%. So anytime Bitcoin's price, or not price, but MVRV, the average returns over a 30-day span for traders, anytime it gets below negative 15%, that typically is a sign of a bottom. We saw it very clearly here where prices rose until MVRV got into the positive range. Very good sign here, even though it never made it below negative 15%, prices exploded there. This was an interesting one here in early December because prices became very volatile and there was some dip buying. And basically because the 30-day window was closing, the 30-day MVRV was able to move up without prices moving up too much. This was a very good bounce opportunity right here. As soon as it went down below negative 15%, prices bounced. And then here, it's done kind of a similar thing to what it's done in early December. So the latest dip into negative 15% or below resulted in the prices at least stopping the bleeding. However, it's not really showing a bounce as of yet. And the MVRV for 30-day traders has moved back up only because the MVRV is basically showing less losses during this time without really the prices moving the MVRV back up. So it's a little confusing, but really what this is indicating is the previous 30 days aren't quite as bad because the cutoff for the last 30 days has moved toward more of like a neutral territory. So like late April, like right around here, it's cutting. This is basically the cutoff here, and it's no longer counting this part, which is why the MVRV is naturally moving up over the last 30 days. That said, we are still in a negative range. And as long as we are sitting around negative 6% or really anything below 0%, it means there's an increased chance of prices moving up compared to historical times. So less risk in getting into an investment compared to usual as long as MVRV is negative. There are a lot of factors that go into this though, and sometimes we like to look at multiple time frames so we don't just have some weird MVRV metrics moving up despite prices not moving. So I like to look, we switch over to our custom metric template. I like to look at this chart from time to time, and it's showing us a couple things. This ignores any given constraints from one typical interval, and it's looking at the 1-day, 7-day, 30-day, 90-day, 180, and 365-day MVRV all together, and showing how average trading returns are fluctuating. And as you would expect, we are very negative, and it looks a little more realistic of a picture with the MVRV not just jumping back up despite prices not moving, because this is taking all of them in totality and blending them together, those different time frames. And so this is really the third time over the past year that we've seen the MVRV this low. You can ignore the numbers. Negative 0.17 really doesn't mean much, but really what we're doing here is comparing the lows to highs compared to previous moments in Bitcoin's history. And when it does get this low, especially, anything below negative 0.15 right there. So when the MVRV is below that, prices do typically bounce. We saw it happen, once here, another time here, a very good opportunity there. And then this time it hasn't happened yet, but we're still in that range. So that is a good sign. It certainly, like I said, doesn't mean it's going to be an immediate bounce, but as long as the MVRVs across multiple timeframes stays this low and shows this much bleeding and pain from traders, it's once again a better time than average to get in. And besides that, we can also look at the short midterm traders and how they're doing versus the long midterm traders, 30 days divided by 90-day MVRV. And we've seen a pattern of prices moving up when the shorter term traders are at a lower level than the longer term, and vice versa. When it's really high, prices tend to drop. Right now, we are in pretty extreme negative range once again. It's really moved down gradually as the prices have moved lower, because the more recent times we've seen a bigger dip than the more midterm timeframes. So that's another good sign that would indicate that historically we're in a pretty bottom-ish looking area, and we could at least see some solace until that pink line I just showed and this red line begin to neutralize back up to zero again. All right, another thing to show while I'm on this template would be the daily active addresses versus price. So this is very similar to how the NVT model looks, where we're looking at the current landscape of circulation versus price. We're now looking at the current landscape of current unique addresses firing off on the network compared to price. And as you'd expect, with such a big dip happening, we started seeing these huge spikes about a week ago, and they haven't really dropped off much since. We're still really right there at 1-year highs, and this is a very good sign because of the amount of utility that Bitcoin continues to see, but despite the suppressed prices. Another interesting fact is the positive versus negative sentiment ratio has dropped down quite a bit. Each of these bars is a week of data, and we can see that the amount of positive versus negative comments is very low right now. It hasn't been this low in at least a year. If I go back to like 2019, it's pretty much at its lowest point, guys, over the last 3 years, other than Black Thursday. This was the week that COVID basically hit the mainstream, and prices obviously crashed significantly in crypto markets and all sectors all over the world. But look at just how much the sentiment has dropped off. And as you'd expect, the last time sentiment got this low, that was pretty much the beginning of the bull market. Doesn't by any means mean that's going to happen again this time. But I'd be very interested to see whether prices can continue to drop off a cliff when there is such little positive sentiment going on across Twitter, Telegram, Discord, and Reddit. We already touched on funding rate. Okay, so let me go back to the other template now. So we touched on daily active addresses, MVRV, and weighted sentiment. Supply and exchanges continues to show a long-term trend of coins moving off exchanges. We did see this short period of time where around that huge dip, coins were massively moving onto exchanges, obviously for the purposes of people panic selling and things that were related to basically capitulating and getting rid of their assets. That's normally a good sign. That's one of the few times where coins moving on to supply is kind of a good thing, because prices are hemorrhaging and people are clearly trying to panic sell and get rid of their assets before they fear prices moving down even further. So now supply and exchanges has normalized again. We're sitting at about 10.1%. So it's on track to get below 10% of Bitcoin on exchanges once again. And overall, this is a good sign. I mean, the long-term trend clearly shows that there is less risk of further sell-offs because more coins are being moved into cold wallets and away from spots where they can suddenly impact the markets negatively. Now let's move over to, we'll do whales in just a moment. Exchange flow balance, we've seen a few big spikes on the outflow side. Every spike that's lower than the 0% line, that means that there's more coins moving off exchanges than on. That, of course, matches up with the supply and exchanges chart that we just looked at. We did see this one influx. That would be the time that we just saw of Bitcoin moving on to exchanges for the purpose of selling, but really nothing too out of the ordinary going on right now. We saw the much bigger spikes that happened here in October of 2020 and January of 2022. If we see major outflow spikes like this, it typically is very good for prices, even if it's shorter term like that. What you want to avoid are the big long spikes on the positive end, which would indicate that prices may come down. Development activity looks fine. Social dominance is continuing to stay pretty flat, if not a little bit negative. The amount of discussion ratio-wise for Bitcoin is sitting at about 15% versus the top 100 market cap assets in crypto. We like to see the social dominance sit at above 20% right there. So as long as it's below, that means there still could be a little altcoin euphoria. I talked with Nuggets News yesterday about this a bit, and we both think that Terra Luna is still impacting the amount of attention that Bitcoin can be getting with Luna 2.0 launching, and obviously the very sad situation that happened with the original Luna of hemorrhaging so much market cap and people losing millions upon millions of dollars collectively. So overall, the social dominance toward Bitcoin continues to look a little unimpressive, and we'd like to see that pick up steam, because as we see, when dominance is really high, leads to pretty good things in price. When it tends to get lower down here, like we saw in April and May, boom, that's what leads to some big drop-offs, because people are too euphoric about altcoins and not paying enough attention to the asset that really drives all of crypto. Consumed is pretty dormant. Let me first show you the ratio of transaction volume and profit to loss for both Bitcoin and Ethereum here. So in short, this metric is measuring the amount, every single transaction that is being made while that position or address is in profit. So it's trading assets when the price is higher than when it first was obtained by that address, or lower than when it first obtained that address. So every single transaction above will basically count as profit. Every one below will count as loss. And we divide those together to show when people are profit taking or losing assets, or making a losing trade, I should say. So the Bitcoin bar here in blue shows that last week we actually had a profit-taking spike, which is interesting. It likely means that there were a lot of transactions from longer-term traders, since there haven't been much opportunities to be in profit on the short term. So it's very possible that they got in way back here when the price was lower than where it is now. But it's now dropped right back to a very negative spot It's early in the week right now. I think the cutoff is usually like Thursday. And if this ratio holds, which it probably won't, it would be the lowest ratio of daily on-chain transaction volume and profit to loss since September of 2019. And that typically is a sign of a future bounce. Same with Ethereum, extremely low right now, this red line. That's an indication that there's a ton of losses being registered, people moving coins, not wanting to lose any more money on their assets. But you really just want to avoid, it's probably a better top signal than anything else. You want to avoid being in an asset or having too much at stake when you see these kinds of huge spikes, indicating there's a massive amount of profit being taken compared to the amount of losses being taken. You can see the highest one for Ethereum in the past 3 years occurred on the last week of October 2021, which was right before its all-time high. And obviously prices dropped off a cliff. So there is a bit of a leading indicator property. If you see, a week in progress where it's very high or very low, there's still a bit of time before you see a drop off come right after. You can see the major profit taking for Bitcoin even. This wasn't the all-time high, but you saw that it was predicting there could be a price drop off, and that happened for about 2 weeks after the highest Bitcoin spikes of the past 3 years, before moving up. And there wasn't much of a signal. It was around neutral this time around when the all-time high actually hit. But consider this kind of a metric where when you see anomalies like super high or super low, those are the times to pay attention and consider whether there's capitulation happening like we're seeing now, or euphoria and greed happening like we saw back in late December of 2020, or for Ethereum more recently around the actual all-time highs in October and November of 2021. Gary, really quickly, can you let me know if there's any questions related to what I've shown before I jump over to the whales? Awesome. So I'll do a few more here and then we'll start taking some questions on some of the assets you'd like us to take a look at. Take a quick sip here. Okay, so we're looking at two lines here. One is indicating the amount of Bitcoin held by whales in terms of 100 to 10,000 Bitcoin addresses. And then the other line is the USDT whales, arguably a few sharks in there too, if you don't believe that $100,000 is really a whale address. But the pink line is showing just how much of the supply they hold. And we documented well the significant drop off that occurred a couple weeks ago for tether whales after the price unpegged and got down to about 95 cents. This came after UST, Terra's associated stablecoin, dropped off a cliff all the way down to 29 cents. So USDT kind of had some fear as collateral damage to what was going on with that coin. And whales really got out of the coin fast because they were worried about the solvency of the coin. The price has since recovered. It's back around $1 again, but the whales are still not trusting it. And we can see that the amount held by them is sitting around 30.9% after just 2 weeks ago being as high as 34.9%. So it's been about a 4% drop off in terms of supply that is no longer held by these massive addresses and is now being held collectively by lower addresses. Typically, we prefer the key stakeholders who are really the drivers of prices moving up and down more than any other group of traders. We prefer that they're holding a high amount at any time. And considering how much they've dropped off, it's clear they don't have much confidence in the asset. Now, if I switch over really quick to USDC, we can see exactly where they've been flocking to. Huge rise that was happening even before USDT had its depeg, and really going all the way back to February 14th. They were holding 22.1% 3 months ago. and they're up to 31.2% now. So a little over a 10% rise in supply of USDC that's now held by addresses holding $100,000 all the way up to $10 million. So that's kind of a neutral sign, really, because when we looked at that USDT chart as it was happening and seeing the huge drop off in whales, we're going, oh boy, that's not good. We're seeing a bunch of big players in crypto moving on from crypto and deciding they don't want to have anything to do with the declining markets right now. But in reality, they've really just swapped over to another stable coin that they consider to be more of a safe haven and less risky of a possibility of the coin having a big rug pull of some type. So that's how they're perceiving it right now. It's very interesting to see, and I'm going to be very interested in how long this trend can continue of USDC continuing to get accumulated after it was kind of stagnant for a while. But look, just in the last couple of days, they're really starting to increase again. And Tether really isn't showing much sign of their holders turning it around and starting to accumulate again. So that's interesting to see. And now if we shift our focus over to Bitcoin, we see very clearly that the 6-month trend continues to show a decline. Whales are not confident in holding Bitcoin the way they were 6 months ago. They held as high as about 49.2% and are now down to 47.3%. 1.9% of supply dumped by whales. It may not sound like a big number, but trust me, it is. That's several $billion, if I'm not mistaken. And if we look at like the 3-year trend, we see just what an impact that dump has and how much the yellow line really does dictate where prices move next. And we saw, beginning around March 2020, just a few weeks after Black Thursday hit, the amount of accumulation they saw, like at the bottom, right around April 3rd, all the way up until April 5th of 2021, they added about 3.4% of the supply. And during that time, prices went up about 740, 750%. That's incredible, of course, and had plenty of other factors that went into it besides just whales accumulating. But look at how, after that, they dumped just in the span of about a month and a half, they dumped about 0.83% of the supply, and prices went down a third for Bitcoin, which is a ton. Then they accumulated another 1.25% of the supply over the next 5 months, and prices went up 69%. Then they started dumping between October 2021 and now, so give or take about 7 months, and prices have dropped 54% or so since their peak of holdings. So yeah, there's a lot of alpha that whales have here, and I would expect that until this gold line shows some signs of a legitimate rise, and I wouldn't call this a legitimate rise by any means, but if it starts to jump back up to, we're at 48% or so, that would be a sign that whales are considering this to be a pretty good entry point that they can dip their toes in once again. And I wouldn't be surprised if then prices started to move back up. But we're not seeing enough sign of that now. And that's why we don't just say like, 25K is the time to buy or 20K is the time to buy. First off, we don't do investment advice or price predictions like that. But we will say whenever the divergence occurs and whales accumulate and they decide on that, we don't just come up with arbitrary prices and say this is when whales are going to buy. When they do, that's going to be our signal where we can tell our community it looks like whales are buying, so historically this is a better time to get in yourself. So that hasn't happened yet, and we're keeping a close eye on this. It is good to see that stable coins appear to be stable a little bit, at least now that the tether to USDC swap seems to have occurred. I would be worried if USDC starts to decline in terms of whale holdings without tether going up. That would be bad, meaning there's less buying power among whales. But right now it seems to be okay, and it was just a very interesting swap between the two stablecoins. So we're about 50 minutes after the hour. I know we started like 7 or 8 minutes late, but I think this would be a good time to start taking questions. So Gary, if you want to give me maybe the top mentioned asset, I can take a look. Of course. OGN, interesting. Well, we'll start with Cardano, where we have just about 2 months ago, we have added about the vast majority of on-chain and social metrics needed to do a full analysis, so that's great. So on the circulation end for Cardano, we're seeing the circulation stay pretty stagnant. The 30-day trend line has slowly moved up. We had one huge anomaly here on May 3rd, so that's likely contributing. But we do see, even without the anomaly, a lot of these pink bars are much higher than they were in April. Let me zoom out a little, give a little more context. Okay, so on the long term, circulation is moving down, but at least since the beginning of this month, it started to move back up again. So the 30-day trend line was showing about 811 million, Cardano moving per day. We're now seeing about 603 million. So we're still far off from where we were back in November. I'd like to see that circulation continues to start to rise. This may be kind of the beginning of a rise, but considering how much of a drop off we've had, it's probably a semi-bullish divergence going on right here at minimum, even with circulation less than it was 6 months ago, simply because the circulation versus market cap is probably seeing a closer gap than it was even back here when circulation was higher. Daily active addresses continues to see a decline. This isn't nearly as intriguing as circulation. Daily active addresses back 6 months ago was averaging around 222,000 addresses per day. Now it's down to 96,000. So that's more than half, probably like a 65% drop in daily active addresses over the 6 months. Not a good sign there. We'd like to see some encouraging signs, a little more like this, except not as a result of prices dropping off a cliff, just an organic rise in daily active addresses that aren't just a reaction to price. That would be ideal for us to see. All right, now on a very good sign, we can see that the 30-day MVRV for Cardano is extremely low, well below the negative 15% mark that we typically look for on 30-day time intervals, and sitting at about 27.4% now. We're still kind of in the range that we were 2 weeks ago. Even when we got to negative 41%, that was the bottom, and prices did bounce a little bit. And now they're declining once again, yes, but as long as we're way below the negative 15% line, it's historically a much risky proposition to get into or add on to positions here. Weighted sentiment, as we'd expect for most assets, it continues to look mildly negative. It's not an extreme range like it is for Bitcoin right now, but Cardano does seem to be clearly below its normal standard deviation for positive versus negative commentary. And the amount of commentary is likely very low too. Let me skip to social volume really quick. There we go. So yeah, social volume as expected. It's pretty suppressed right now. It had its huge moment here. I can't recall exactly what the fundamental event was between the 18th and 24th that caused a huge spike in interest in Cardano. If one of you do, please leave that info in the chat, and Gary, you can read that to me. But regardless, the overall trend for social volume is very low at the moment, indicating there just isn't a lot of interest. And when there isn't a lot of interest, it isn't necessarily a bad thing. If we start seeing like a huge drop off and then prices decline, like sort of right here a little bit, if we see a big spike in social volume after a big price decline, it's likely due to a lot of people talking negatively about the coin and calling it a scam, whatever. And that typically leads to bounces. Vice versa, if you see a big spike in the price of an asset, independent from Bitcoin especially, and then a social volume spike follows, that is typically a top sign and prices fall. This was kind of a weird anomaly where it was mostly flat at the time of this big spike. So once again, I'd love to find out why. But regardless, social volume is down. It's being a bit ignored right now. So one could argue it's a bit under the radar. It's certainly not a bad sign by any means, but we'll keep a close eye on social volume for Cardano and see if there's a big spike that we can report on. Let's look at whales for a minute for Cardano as well. So the price of Cardano is sitting about 46, 47 cents. I would put whales as a result of that anywhere from 10,000 to $1 million. There we go. Confirm. So not a great sign here, and it does look like this group of whales has some nice alpha on the markets. They tend to accumulate as prices are dropping, and once we see a bottom, that's when prices start to rise and they're starting to decline again. But overall, this group holds about 27.5% of the supply, and they are the lowest they've been in the last 6 months. If I go to the last year, yeah, the lowest in the last year. If I go to like 2019, so we have to go back to April of 2020. So right after Black Thursday happened, this was the last time the proportion of supply held by these whales was this low. Not a great sign there. It's probably not an ideal setup whatsoever, while whales are showing more signs of dumping and not accumulating. If we go back to about 2.5 months ago when they were at their local peak, they've dropped about another 3% of the supply, 10% of their holdings overall, and the prices have dropped about 42%, which is probably not a coincidence. So it's interesting, even going way back to March 2021, they were dumping prior to the big all-time high that occurred in August of 2021. So this was likely a pretty inorganic pump, and we saw just how swiftly prices dropped off afterwards. That's pretty typical if they don't have whales supporting the price staying up like that. So I'd be very weary while whales are this non-confident in the asset. Age consumed, we also had an interesting spike here. So this was the largest age consumed spike here at the beginning of May since February 2020. So a little over 2 years since we last saw a level of coins that were dormant moving at the rate that they were. And that really was a capitulation sign where just on this very small spike, a whole lot of Cardano that was sitting in addresses were moved and probably rid of, or at least moved to a new address. But considering it happened on a slight up move, this was likely a dump and not an accumulation. We'd rather see age consumed spikes happen when prices are falling, like this mini spike here or mini spike here. But the larger the spike, the more confidence the spike will have in impacting the price in the opposite direction. And it seems that whale transactions are quite low as well. We did see a very small spike here where there was some accumulation, but it's dropped pretty much back to where it was in terms of price, and whales aren't really interacting with the network very much. So yeah, that's a recap on Cardano. Why don't we do 2 more assets, Gary, and then we'll start wrapping things up here.
All right, and next asset could be OGN, Origin Protocol.
Perfect, thanks. Perfect, thanks. Good old Origin Protocol, which is the 301st ranked asset. It is pretty under the radar and not nearly as known as Cardano and some of these other top assets. But it is an ERC20 coin, so we'll have plenty of metrics on it. We do see that since May 12th, there's been some interesting fluctuations in circulation. The biggest spike happened back around March 12th, and these are pretty much the three biggest spikes we've seen since then. Going back before, the last big spike was way back in July of 2021. So it does appear to be a pretty active asset for some reason. Just like most assets, it's kind of in a local bottom territory right now, or I shouldn't say local bottom, but at least it's very low, and probably seeing around a 1-year price low like most assets are. So circulation is up. I think that's a good sign. I would be curious as to why. So let's take a look at some other metrics. So that the axis on daily active addresses is completely dwarfed. Let's zoom in a little bit, look at the last 10 months. Yeah, not a lot of daily active addresses at all. It's sitting at about 129, 130 active addresses per day right now. We should have MVRV without the intraday. So if we look at daily 30-day MVRV, there we go. We have some data. The negative 15% line is right there. OGN is just above that at about negative 13.6. I didn't mean to make an alert. So yeah, MVRV is fine. It's arguable that it isn't really as low as most of the other altcoins. So this is slightly more risky in terms of not as much trader pain happening for OGN as we're seeing for assets like Cardano. Weighted sentiment, interestingly, we've seen a big spike positively in terms of the crowd perception of this asset. Again, I don't know why this is occurring, but it does occur. It does appear that there's some increased enthusiasm at this price point. Perhaps some people are buying the dip and believe that OGN might take off soon, but it is interesting to see because pretty much since late February, it's been nothing but negative perception toward OGN, and we're finally breaking that spell here, at least so far this week, with some nice positivity. That isn't necessarily a good thing, though. That means that people might be a little too enthusiastic about a potential dip buy opportunity here, and we'd rather them be fearful and dreading how much further down prices can go. Another not so good sign would be the amount of supply on exchanges. If we go back to July, it was sitting at about 11.4%, and as it sits now, we're up to 23.9%. So about a quarter of the supply of OGN is now sitting on exchanges when it was less than half of that 10 months ago. Especially recently, just in the last week, we saw a big pop of supply on exchanges moving from 17.2 to about 24%. So give or take about a 7% rise just in the last week. I'm very suspicious of this and exactly what's going on there. If any of you have some ideas as to why this amount of OGN is moving onto exchanges, I would love to know myself. You can also look at whales here. The price is sitting around 21 cents, which means the 10,000 to 1 million coin address is about right for whales. It looks to be pretty flat, not really much movement either way, going at least back the last 2 weeks. It's staying pretty stagnant. They don't hold nearly what they were holding back around the all-time high levels. Actually, all-time high was back in September, but this is when Bitcoin and Ethereum were hitting their all-time highs, and that is when OGN had their most participants, or most supply, I should say, held by whales. Price has, since that time, price has dropped about 22%, and the supply held by whales has gone from 8% down to about 6.2%. So they've dropped about 1.8% of supply, which equates to about 21.5% of their holdings that they've dumped. So not a great sign since then, and it's moving pretty flat now. This is the case for a lot of smaller cap altcoins, where it's kind of just the founders and the larger cap, the larger proportion holders are kind of sitting on their hands and waiting for the next big move right now. And as you'd expect, there was a huge inflow spike in terms of coins moving to exchanges, pretty much the biggest in the last 10 months by far. That matches up with the supply on exchanges spiking. Again, not a great sign. I don't like to see that so many coins are moving to exchanges. It could indicate that there's a future sell-off being planned. Major network realized profit loss spikes on the negative end, showing that there were a lot of losses being registered and weak hands jumping out on the network. It does appear that things have neutralized, but these were signs that there could be some dip opportunities to buy. And there was at least a little bit. The price did jump about 30%, so that's a little more than a little bit. And these network realized profit loss spikes being so negative were likely a catalyst and an indicator that you could get in cheaply based on other people's losses that were accumulating on the network. Development activity, it doesn't look like OGN is a very highly developed coin on a daily basis, but it's also not nothing. It gets about 4 GitHub submissions per day right now. It got to a peak of about 53 back in August. So it isn't quite as active as it was last year, but be careful and just pay attention that it doesn't drop down to 0 or 1. Those are the kind of development activities metrics that we look at where we start to worry that it may be a scam coin or a rug pull of some type. And I don't know much of anything about OGN, so I'm certainly not accusing this asset of being that. But any asset that really isn't showing any activity, that's just a bit of a warning sign. And that's not the case of what's going on here. It's just a small asset that gets a small amount of development activity. Social dominance, nothing too special to say. Age consumed, nothing too special there. Whale transactions have been a bit interesting as well. So it looks like the biggest 2 spikes occurred here, right at the local top around mid to late March, and then on the way down in late April. This was a bit of a fake out for sure. Normally, if we see a price moving down and suddenly a big whale transaction spike, that means that whales are accumulating, but it just didn't seem to matter much because prices were crypto-wide were just hemorrhaging at this point, going into the FOMC meeting that occurred on the 3rd and the 4th of May. And then we finally did see a whale transaction spike at the bottom that indicated that there would be a turnaround, and that appeared to be a pretty good signal right here. Now we just had another spike just a couple days ago on the 25th, and that's happening on the way down. So I wouldn't be surprised if this is another accumulation by whales. But so far, price is continuing to tick down. I'm curious to see, like, especially if there's a big bunch of spikes in a short period of time, that would be a very good sign. Those tend to be the ones that display the highest level of confidence. Right now, we're just seeing isolated spikes of, something like 46 whale transactions when it's usually at like 1 or 2 or 3. But here, we were seeing like 39, 15, 65, all in the span of like a day or so. That's what you want to see, because it means that whales are really becoming active and taking interest in dumping the coin like they were here, or potentially accumulating like right here to an extent. This is arguably a pretty good bundle of spikes showing that they were accumulating right close to the bottom in mid to late January. So let's take a look at one more, Gary. Thanks for the suggestion on OGN, whoever you are. That's a very interesting look at a coin that I've not really looked at before on Santiment.
All right, and the next one could be Polygon.
Sure, let's take a look at MATIC.
Sure, let's take a look at MATIC. Definitely one of the darlings of 2021. It gained a ton of popularity throughout that year. Okie dokie. So we did see a big circulation spike, like many assets had here in mid-May after prices bottomed out. The biggest circulation spike occurred near a top, but overall, it's a pretty flat performance in terms of circulation, so not much to say there. Daily active addresses, this is more interesting because we're seeing a continued decline in the amount of unique MATIC addresses that are firing off on a daily basis. We're pretty much at a 1-year low. Let me go back to like 2019, see just how far back we have to go to see the last time we were this low. And it looks like February of maybe March 2021. This was about a year after Black Thursday. That's the last time we saw daily active addresses on MATIC this low. And subsequently, we saw them explode here in May as prices were just absolutely soaring. And again, kind of a more mini explosion, not as much density to these candles here in December 2021 and January when it was at all-time high levels. But yeah, over the last year, not really a great sign to see that there are less and less participants. This is one where this is a metric where we actually do want to see an increase as prices are moving down, because that would imply there's more and more utility happening. But right now it's pretty much rock bottom for the last year at least, and we want to see that picking up before we feel really confident in an asset being able to go supernova. If we go to the 30-day MVRV, we are a little below that, below the opportunity zone threshold, which is a good sign, sitting at around negative 18%. Typically, when we do get below this opportunity zone, it leads to good results for MATIC. Pretty much all of these, this would be an exception. And so far, this is kind of an exception too. Most of the time, we see that when it goes below the negative 15% threshold, prices generally move up. I'm very interested, really quick, I'm going to switch over to the custom template and look at the MVRV for multiple time intervals. Okay, so this is a good sign because we are at 1-year lows when you look at the 1, 7, 30, 90, 180, and 365-day MVRV all combined together. We're pretty much at 1-year low levels right now, and it really hasn't jumped up much since getting to its very true bottom right there. So yeah, the MVRV is looking to be a very good sign for MATIC, considering just how much traders have lost in their positions from that asset. Active addresses versus price, nothing too special there. Very negative sentiment, that's worth noting as well. Not a lot of talk about MATIC, and when there is talk, it's not a very positive outlook. Okay, going back to the main template again. Development activity is looking really good. This is a nice sign, especially when prices are declining and you see development activity from the team moving up. That's a sign that the team does very much believe in the long-term viability of MATIC and are working hard while the price is suppressed and interest is low in it. So I like to see a sign like this, and the good projects out there tend to have a lot of work being done while the interest in the project is low. Social volume and dominance very low right now. So like Cardano and some other assets, just not a lot of interest in MATIC right now, especially compared to what we were seeing in September of last year. Not a lot of dormant coin movement, and not a lot of whale transactions either. Yeah, I mean, we got a little group of mini spikes here on the bottom, but really that's not much at all compared to what we were seeing back in December, where there was just a lot of accumulation happening. One isolated spike here, that looked like it was some profit taking. This looked like some profit taking as well. Yeah, overall, whales aren't showing much interest, but let's take a look at how much of the supply they're holding right now. I'll just switch to another template so we can get a good full screen view. Get rid of Bitcoin here. So MATIC is currently priced, but we want to switch it off of Bitcoin's price. So MATIC is at 58 cents. I would want to look at 10,000 to 1 million coin addresses. That's interesting. Oh, wow. So let's look at the last year, probably even the last 3 years. So we can see quite clearly, wow, they hold, you know what I might want to include, since this is such a small proportion of the holdings, only 3% held by the 10,000 to 1 million addresses. I'm going to zoom out a little and look at the 10 million, up to 10 million coin addresses as well. So this appears to be a very centralized asset, more than I thought. The 10 million to infinity coin addresses hold about 87% of the supply. So if we combine the 10,000 all the way up to 10 million coin addresses, they still only hold about 12% of the supply, and they are moving up a lot. That's very interesting to see. So 10,000 coins would equal about, give or take, $5,000 to $6,000. So that's probably arguably not whales. I'm going to change it one more time to 100,000 to 10 million coins. So that's about 10.7% of the supply dedicated to this group. So this is anywhere between $58,000 all the way up to $5.8 million in holdings of MATIC. So I'd argue that's a pretty good whale sample right there of actual active traders as opposed to founders or exchange addresses. And they are just constantly moving up. That's a very good sign, in my opinion. Outside of this dump that occurred in June, where it's very hard to even tell because prices are so suppressed on this axis. I can't tell whether prices actually were impacted by that. But really, when we see a big spike in accumulation all of a sudden, which happened right at the base of this price right here, yeah, we can see that the price is clearly getting impacted positively. And considering they aren't really dumping at all and continuing to accumulate based on smaller addresses giving up their assets, I'd say it's a pretty good sign. I'm interested to see if like the 1,000 to 10,000 coins are moving down. They're not. 100 to 1,000, not really. Yeah, sort of. They definitely dumped a ton in December before finally starting to accumulate again. 10 to 100, 1 to 10. Yeah, so this looks like a case where it's just the 10 million to infinity addresses continuing to slowly circulate out their assets into all of the smaller addresses. But I'd still say that the 100,000 to 10 million coin tier would be the most important to look at, because these are people with a lot of money in the asset and are still paying attention to prices, but showing that they are accumulating more and more over time. It probably is going to be best once the 10 million to infinity line starts to level out, so we can really see how other tiers are fluctuating and not just seeing all of these 10 million to infinity coin addresses breaking into smaller addresses, which is what's going on right now. But for now, it's at least a promising sign that the, 58,000 to $5.8 million addresses are still moving up, and we're not seeing any signs of them dumping and giving up on the asset. That would be really bad. So yeah, we're about 20 minutes after the hour now. I think this is a pretty good stopping point. Are there any final questions or clarifications people may want on everything I've shown today? Great, I'll just assume that I made perfect sense and everybody loved every minute of it. But yeah, I appreciate everyone's time, of course. Thanks for tuning in. The likes on these videos, as superficial as that sounds, make a massive difference in our ability to reach new people and spread the word about our metrics. So please drop a like and make sure you're subscribed if you haven't yet. Pass on the word to friends and family about Santiment. Let them know that they can get all of these metrics for free for a week to just try out. And then it's only starting at $44 a month thereafter. And many of you guys who are Sandbase Pro members know just how valuable some of our daily conversations are about the markets. And I hope we see you there. So for now, I wish you all a very pleasant and safe and warm weekend. And on behalf of Maxim and Gary, thank you for filling in for Balresh this week. Appreciate you all, and I'll talk to you